There is no restriction from our end. We had already allowed pension fund managers to invest in IPOs, and they have also done in a few of them. Now they can invest in LIC IPO too, but the final investment decision rests only with them, and there is no regulatory bar or restriction. Open to all. Up to March end, nearly 4.01 crore subscribers have enrolled under the APY scheme. The APY scheme is open to all citizens of India between 18 to 40 years of age, and there is huge opportunity as there are 45 crore eligible people between 18 to 40 years. So the pension fund managers can take part in LIC IPO. Capital deduction norm may limit banks' investments in LIC IPO. Capital deduction norm may limit banks' investments in IPO. This is a kind of glitch. We only see it from a distance and feel that it is great. But this is a problem which they have to face. Here I read. LIC has equity, additional Tier 1, Tier 2 capital investments in various banks. I read it. Banks may not be able to invest at will in upcoming IPO of Life Insurance Corporation of India, for they will have to weigh the capital deduction impact. Banks have a limitation. A clause in Reserve Bank's India's Master Circular on Basel III capital regulations relating to reciprocal cross-holdings to capital of banking, financial and insurance entities may prevent banks from going all out to invest LIC's IPO. They may prevent. Hello. Capital deductions impact. Since reciprocal cross-holdings of capital market might result in artificially inflating the capital position of banks, such holdings of capital will be fully deducted. LIC investments in the forms of equity, additional Tier 2, AT1 and Tier 2 capital in various banks, investment made by the latter in the corporation's upcoming IPO could impact their capital adequacy by few basis points. So banks will need to assess whether the returns they may get from the investing LIC's IPO more than capital deduction impact of the investment. Among the banks where LIC and its various schemes hold equity investments are 1. State Bank of India 8.40%, Punjab National Bank 8.34%, Canara Bank 8.83%, Bank of India 7.05%, Union Bank of India, Bank of Baroda, ICICI Bank, IndusInd Bank, Kotak Mahindra Bank, Yes Bank, all these banks. LIC is also promoter of IDBI Bank holding 49.24% stake. This is a great glitch one has to understand. Please highlight it. So they may seek yet another relaxation or abide by this. IDBI Bank, as I read earlier, IDBI Bank, I read earlier, going to get a threat from the threats, possible threats. What are the possible threats for this IPO? I read earlier, I read again. These threats should not loom large. They must be answered. In the future, they may not be obliged to inject additional funds into IDBI Bank. In future, they may not be able to, they may be obliged to inject additional funds into IDBI Bank. So what they say here? They say here that LIC is also promoter of IDBI Bank holding 49.24% stake. Banking expert V. Vishwanathan observed that since LIC has invested in equity 81 or Tier 2 capital of many banks, the cross-holding regulation may apply. This will require full deduction from the regulatory capital of the investing entity to the extent of investment to be made by it in LIC. So the banks are having a problem to invest in LIC, and LIC itself is a promoter of IDBI. Whether they will continue it as a listed company or will come out of it, only things to decide we will have to see in future. One more. The IPO will provide impetus to rural participation in equity markets. Earlier, people from the rural side had no idea about markets and its investment, but now because of LIC IPO, they are pushed into the markets and opening demat accounts. The LIC IPO is expected to attract millions of new investors given the trust that LIC has built with the common man over the decades. A lot of these investors, who might also be policy holders, are expected to come from Tier 2 and 3 towns. Majority of the rural households have little or no financial literacy and must prefer to park their money in the bank deposits and therefore settle for lower interest, while investments in capital markets offer massive opportunities to grow their wealth. So, the rural people earlier used to only depend on the banks for their safety of their wealth and improvement of their wealth at a very simple interest. But today they are forced into open markets for better improvement of their wealth positions. LIC stands tall. Tall LIC. At 1.1 times financial year price to embedded value, the IPO offers reasonable upside. So finally, this is what I was saying, 1.1, 1.1, 1.1, 1.1. That is enough. That is settled now. 1.1. Investors buy into initial public offering IPOs on two grounds. One, the belief that IPO is valued reasonably compared to listed peers and stocks may not be available at such attractive levels post listing. And two, for possible listing pop. So it is very reasonably priced at 1.1 embedded value, and the same price will not be found again. So the people must be interested in it, and so let us sing great about it. Points to note: at 1.1 times a financial year, the PEV of the LIC stock factors in some of the shortcomings discussed above. A quick rating of multiples of LIC to close in on the gap with private players seems unlikely. When compared with the global players, LIC is the only insurer with over 60% market share in its home country. Foreign giants in the space such as Ping and Insurance Alliance, AXA, MetLife and China Life Insurance have far less leadership position, 7 to 21% market share in their respective home countries. They trade at 0.8 to 0.9 times P bar EV value. The LIC stock is best suited for investors with a long-term investment horizon owing to its size and objectives. The 25 to 30% annualized premium growth displayed by private players in the last 3 years may remain unachievable for LIC. Growing its APE by 10 to 12% and VNE by 13 to 15% may be the best scenario. The listing of LIC opens the door for follow-on offers or subsequent stake dilution by the government. Therefore, in a scenario where the LIC stock may not be re-rated hurriedly post-listing, the follow-on offers may present better buying opportunity, though it's still a year away. Also, markets are unpredictable, and hence a bird in hand is always worth two in a bush. In this context, investors can subscribe to the IPO as pricing is realistic in today's scenario. Pricing is realistic in today's scenario, and this paper itself tells the follow-on offers after 1 year can be very good, but a bird in hand is worth two in the bush. So subscribe, take money. So the investors who wait and take the fizzled out properties will also do well, even if it runs otherwise also. This may come out and give a different, as the year 22, there will be the gains fizzled out on the long term. Gains fizzle out on the long term. Wait, definitely will get. But hurrying may not be good, because many large LIPs and IPOs and mega issues have literally failed. Here are some, we have brought them together. You can just understand, for your better understand. Mega issues. Despite a cut in size, IPO size, the forthcoming offering LIC would be the largest in capital market history. At the upper limit 902 949, LIC intends to garner 20,557 crore via this offer. This would make LIC the first IPO to float 20,000 crore issue. At listing on May 17, the IPO would command market capital of 6 lakh crore, which would probably be the highest for any stock at listing. And here are few IPOs which were in excess of 10,000 crore and how they fared. Paytm 18,300 crore. This is about 10,000 crore. It went miserably down. It closed on November 10th. The 18,300 crore IPO, the biggest so far, managed to see 1.89 times its subscription, led by QIBs and retail investors. As things stand, the stock trades 70% lower than its issue price of 2150, and today it is 73% down. That was the fate of Paytm IPO. Second, you see the Coal India, 15,475 crore. I think this is faring well. The 15,475 crore IPO had left all market men predicting how much liquidity would it suck out from the secondary market. Coal India generated bids worth 55 million, which was more than GDP of 140 countries as of FY10. It was almost 10 times India's health budget for 2010-11, 5 times India's education budget, 1/4 size of the union budget itself. I think this is going up and this is faring well. Reliance Power, 11,563 crore. It was subscribed within the first few minutes. It took book building process. In fact, by the end of the day one, the bidding process, the issue had received over 10 times subscription. The issue attracted over 5 million bids across categories. This is up. General Insurance, 11,372. GAC RE is the sole insurance in the domestic market. It provides reinsurance to the direct general insurance companies in Indian market. This must be up. SBI card. The quota reserved for qualified institutional buyers was subscribed 57 times, while the non-institutional investors category was subscribed 45 times. The scrip had a tepid listing day. So, listing day is usually good. For LIC it will be good. And this year also we have many companies online. Though are EDS Software, Traction Technologies, Fusion Micro Firms, AGS Transaction Technologies, Utkarsh Small Finance Bank, Arohan Financial Securities, Veda Clinicals, VLCC Healthcare, ESF Small Finance Bank, Fincare Small Finance Bank, Sterlite Power Transmission, Prudent Corporation. These already have the SEBI approvals and many have rolled out, some are yet to be rolled out. So we are going to see more IPOs also this year. But the war-torn world today has a problem, and it is definitely having a bad effect on the IPOs, and that's the reason the size is cut down drastically. Once a great LIC is now brought down to 21,000 crore because of the situation. UBERRIMAR FIDEI, that must be found. Friends, subscribe to this LIC. You have follow on LICs also. The government is interested in its money. The government is not interested. It is only interested in giving relaxations. LIC IPO may see new high in retail interest. About 22.13 crore shares will be sold as part of this IPO, of which 0.025% is reserved for employees and 0.35% for policy holders. Beyond this, 3.5% of the shares are reserved from the real investors. This is the thing which we wanted to focus. Finally, friends, I will bring about this UBERRIMAR FIDEI. UBERRIMAR FIDEI, out of utmost good faith, which is brought you out of utmost good faith. This LIC IPO is from utmost good faith. So I'll read this and be patient to hear this, because this will decide the sum and substance of this LIC IPO. UBERRIMAR FIDEI. Centre's decision to go ahead with LIC IPO without waiting for Goldilocks moment is pragmatic. The Centre's decision to go ahead with the initial public offer of Life Insurance Corporation of India without waiting for ideal market conditions is pragmatic. The offer was put off in March as the Russia-Ukraine conflict cropped up to roil global markets and send Indian stocks into correction mode. Though the conflict has since continued and foreign portfolio investors have been in the pull-out mode, the Indian market has proved fairly resilient to the upheavals, with domestic investors cushioning its fall to less than 10%. The medium-term outlook for equities remains choppy with continued geopolitical tensions, US Fed rate hikes and inflationary pressures. So, there would have been no point in the government putting off this murky IPO indefinitely while waiting for sanguine market conditions to re-emerge. By paring down the equity stake proposed to be disinvested from 5% to 3.5% and settling for disinvestment proceeds of rupees 21,000 crore instead of 50,000 to 70,000 crore as expected earlier, the government is signaling that it does not view the LIC's divestment as a mere fundraising exercise. The listing of India's largest state-owned insurer opens up its operations and financials to public scrutiny, making the IPO an important step forward in India's financial reforms. With over 40 lakh crore assets and 29 crore policy holders, LIC is India's largest domestic institution and has a larger retail footprint than the entire mutual fund industry. With its operations governed by the LIC Act without independent board oversight, LIC was often criticized for making less than transparent investment decisions at its promoters' behest. The government reforms initiated preparatory to this IPO to transform LIC into a board-managed corporate entity, bifurcate its shareholder and policyholder funds, and lay down a clear surplus distribution policy could benefit both policyholders and markets at large by ensuring more transparent and commercially driven decisions. Listing will also open up new market-based funding sources for LIC to bankroll growth and maintain a healthy solvency ratio without relying on exchequer. Though doubts have been raised as whether the Indian market has the capacity to absorb a 21,000 crore offer, serious long-term investors, whether they are retail, domestic institutions or foreign funds, will find the LIC's offer hard to ignore. With rupees 6 lakh crore market cap and the 66% market share, the LIC remains a dominant force in the India's under-penetrated life insurance market. Concerns that LIC, due to its size, cannot match the growth rates of smaller private players seems to have been addressed in the government setting the offer's valuation at 1.1 times embedded value when private players trade at 2 to 4 times. The percentage, the 10% policyholder reservation and discounts for policyholders and retail investors aim to translate the enormous goodwill that LIC enjoys among Indian households into IPO subscription. Having set a low bar on inceptions, though, the government needs to ensure that LIC delivers on financial performance and shareholder returns post listing, so that long-term investors who put faith on the IPO in these turbulent times are not disappointed. So the government should lose its control or its dominance or its directives on LIC. Earlier it was asking LIC to invest in some bodies, and LIC had no say, it had to invest in them. But it's not the same today. LIC should be independent of IDBI bank also in the coming days, and it must pay a good pay, and it must honestly UBERRIMAR FIDEI out of utmost good faith serve the people and not the government. LIC from hereafter should serve the stakeholders and not the government and its dictates. The UBERRIMAR FIDEI is such a long editorial given by the business line. And once again I read one little sentence, important sentence. Commercially dividend decisions. The governance reforms initiated preparatory to IPO to transform LIC into a board managed corporate entity, bifurcates its shareholder and policyholder funds, and lay down a clear surplus distribution policy could benefit both policyholders and markets at large by ensuring more transparent and commercially driven decisions. Listing will also open up new market-based funding sources for LIC to bankroll growth and maintain a healthy solvency ratio without relying on the exchequer. So that must be the key driving factor, and let the Almighty God give prudence to all the board members of the LIC to lead it into a glorious stock of the Indian markets. With this, friends, I am happy giving you a final episode on LIC before its rollout on May 4th, and hopefully, if need be, we will come out with one more IPO before May 4th and one more episode before May 4th and one more episode after 5th or 6th and a final episode let us see on May 9th. With this, friends, I am Dilse Bitratnam signing off. Take key notes from this episode. I am not singing happy about LIC, neither am I singing bad about LIC. It must turn into a glorious stock of Indian markets and must find its place in the Nifty 50, which is everybody's dream. Nifty 50 stock, LIC. LIC must find its place in the Nifty 50 stocks. First Nifty, let us understand its position. After that, where it will stand, whether it will stand in from 1 to 10 or 11 to 20 or 21 to 30, 31 to 40 or 41 to 50. It must find place in the Nifty 50 stocks and it must be necessarily at least below 20 right now or post listing. It must be in below 20 and slowly should rise to this slot, so that we can call it a successful, glorious stock of Indian markets. Thank you, friends. This is Dilse Bitratnam. Take time to subscribe to my channel. Bye.